Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then I will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using a combination of these two different types of analysis, I will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting here from the monthly time frame, what we have is a market which at the moment is about to test a quite strong monthly support and demand area. In fact, if we look closely, we can see how this area was acting as previous support here, turned resistance here, and at the moment, as the market has broken above this level, this previous resistance is now once again turned support, and as the market is testing this previous resistance turned support, we could expect some bullish price action to be created away from this level. So from a monthly standpoint, everything seems quite bullish. We can also notice that from a pattern standpoint, we have a very clear impulse followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly with this previous resistance turn support, creating a confluence of support inside of this area, which again, we could expect this market to test and then to reject to the upside, respecting it as confluence of support. Also important to keep in mind that inside of a confluence of support area, there is good probability of seeing institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this zone. And we will be speaking about institutional longing later on when we go and check the commitment of traders. Now, dropping down on the weekly time frame, what do we see? From a weekly perspective, we can notice how clearly the market has been respecting this area in the past. In fact, this market respected the area as support here, again as support here, then we had the break below that zone, and what we know is that previous support, once it gets broken to the downside, becomes resistance, and the market in fact respected this level as resistance here and rejected it to the downside. Then we had the break back above the zone, the market respected the area as support here, and now we're getting another test of the zone, from which there is the possibility of seeing another rejection to the upside, as already happened in the past when the market was respecting this area first as support, then as resistance, and now again as support. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, we can notice that in creating this move to the downside, the market has also currently just printed this overextended M pattern. In general, after the creation of an overextended M pattern, what you would expect is a potential rejection to the upside for the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is from this high to this low, which gives a first upside target at this 0.32 of the Fibonacci taken on this impulse to the downside. So there is definitely a possibility from this area to see a potential rejection to the upside back to this retracement level. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the NZD, we can see how with the last reports, we had a massive increase of the net positions. We went from having minus 19.6k net positions all the way up to having minus 1.7k net positions, showing how a huge amount of institutions have been moving back to the bullish side for the NZD, meaning to the bullish side for NZDUSD, because all currencies on the spot are traded against the USD. So as institutions were longing NZDUSD, we could expect a potential rejection to the upside away from this level. So it seems like we have good probabilities that inside of the support area that we have previously identified on the monthly and weekly timeframes, we could see more institutional longing, which at that point would further increase the probabilities of this potential rejection to the upside, completing this overextended M pattern from a daily perspective. So what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish market during this move to the downside to an intraday bullish market, at that point I would expect a potential rejection to the upside for the market to go and retrace at least to the 0.32 of the Fibonacci taken on this daily impulse leg, which at that point would complete this daily overextended M pattern. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you will have the possibility to gain access to the most complete, all-inclusive mentorship program. And in this program, you have the possibility to gain access to all my trading courses, the COT data software, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me. And if you continue to scroll down on the website past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.